Hey, everybody. Thanks for stopping by. I'm in a Zoom meeting with a friend of mine, Rick Wertheim. He's with Independent Financial Group. And I was just talking with Rick the other day, and he shared an interesting graph with me. And he's got a couple he's going to share with us right now. If you'll look below this post, I'm gonna actually attach these. So if you want, you can print them out, and so they'll be readable for you, because I know it'll be difficult here on the video. So with that, Rick, we've been through this before. What do you think? Are we going to survive? What's the turnaround look like to you?
I appreciate you having me on here, Chuck. The long-term market has always recovered. I can't guarantee anything, certainly, nor do I know how long the dip will last. But if we use history as our guide, there's a lot of information that we can utilize to feel more comfortable and recognize that we will likely make it out of this. I'll share a couple of documents here. Let's grab these. So this one I shared with you the other day.
Right.
This is an interesting piece that just shows the stock market over the course of various epidemics in the past, going back all the way to the 80s with the HIV and AIDS epidemic, to most recently Zika and measles, but we've got Ebola in there. You can see over here, we've got what the drawdown was during those time periods. Sparing everybody the details they can certainly look at on their own, but on average, we saw a decline of 6.1%. 6 months later, the market was up 8.8%. And 12 months later, on average, the market was up 13.6%. Now, I'm certainly not one to gloss over the fact that this is certainly an unprecedented time. I know that gets thrown around a lot, but certainly unprecedented when the government shuts down businesses like this. So I really don't know what's going to happen. However, we were way up here. The market has come down to something like this. We're below the 2,500 mark today, but we've already recovered substantially from the lows just a week or so ago. And, when we look at the market in general, I know this can be a little overwhelming, but again, anybody looking at this can take some more time and look at all these different events that have happened over the course of time. This goes back to January of 2008. And we all remember what happened during that time period, the global financial crisis. But even since then, there have been plenty of reasons. These are all negative events. Plenty of reasons to maybe not be invested. However, the market, in spite of all that, in spite of all the ups and downs, has continued to climb. Now, certainly we're no longer at this peak, but there's every reason to believe that by staying invested and holding on, we will see a recovery. And to that end, we kind of look at what has history told us about market gyrations and market movement. In any given year, it's not uncommon to see a 5% return. In fact, about 5 times a year. A 10% decline happens about every 7 months. I start going to a little scarier numbers at 15% or more. That's beyond a correction and starting to border up on a bear market. That happens about every 1.5 years. And a 20% or more decline, which would be technically defined as a bear market, happens about every 2.5 years. So when you actually look at the numbers of how we've performed since the bottom of the market in 2009, we were actually well overdue for a bear market, and we were in one of the longest bull markets in history. And so this might be the new normal. We were really riding that high. However, the average length was only 183 days, so maybe half a year to see that and then recover. In fact, anecdotally here, we actually went into a bear market, and within, I think it was only 2-3 weeks, we recovered from that just yesterday, and we actually turned into a new bull market. So went from a bull to a bear to a bull again in a matter of less than a month. Of course, the market actually is down again today. So it's hard to say what's going to happen going forward, but the bottom line for anybody taking a look at this is scientific or academic research would tell you to stay invested. Yes, it's going to be scary, but the best thing to do is actually not try to time the market, but to have time in the market and stay invested through the ups and downs.
Oh, good stuff, Rick. Thank you. Say, when I introduced you, I didn't do anything about your contact information. If somebody wants to talk with you and commiserate a little bit, how would they do that?
My phone number is probably the best. I actually can, it's a cell phone. I can take phone calls or texts. That's 916-749-9934. My email address is rwertheim, rwertheim @ifgrr.com.
All right. Good going. Hey, thank you a lot. I really appreciate you sharing with us, and I look forward to seeing you sometime soon. Have a great one, man.
I look forward to seeing you when we're done social distancing, Chuck.
Excellent. Thanks.
Take care. Be safe.
Bye-bye.